Today we're going to talk about what should you do when it comes time to file your taxes if you want to buy a house.
Nobody loves to pay taxes, but when it comes down to qualifying, you're going to be happy that you did and you showed what you showed. In order to purchase a home, you have to show us the money.
You buy a home, you create wealth with the home, and once the wealth is there with the home, what I'm seeing a lot of people doing is cashing out on the home, taking the money, and creating other streams of revenue and renting.
The problem I'm seeing now, everybody starting out is looking to purchase their dream home. You don't need that. You need to just get in the game. Great news. The last time we had a conversation, rates were going up. Rates are now coming down.
Hi everyone, welcome to Making Money with Laura Sanders, and I am your host, Laura Sanders. Every week we talk about something to help you make a little money, save a little money, or maybe just help you navigate this crazy world we live in. And as I always say, it is crazy. So today we're going to talk about what should you do when it comes time to file your taxes if you want to buy a house. So with me today, I have Cliff Bernstein. He is with Fairway Mortgage, which is one of the top mortgage companies in the United States.
Yes, we are.
I learned a lot of things about Fairway. And I've also learned about how you got to Fairway, so got to listen to some of our previous shows and you can learn a lot more about Cliff and Fairway.
A lot to know.
Yeah, so the tax season is here.
It's upon us.
Yes.
It's upon us.
I
don't see
definitely
any,
need to file an extension.
I don't see any CPAs in the streets. I don't see them in Publix.
They don't come to our meetings.
They don't.
So if I wanted to buy a house and I have not filed my taxes yet, does it matter if I'm a W-2 employee?
It doesn't matter if you're a W-2 employee.
Why?
So, well, basically at this point, if you're a W-2 employee, we're going to just ask for your most recent W-2, which would be 2025. So you'll have your W-2 has been issued. You may not have filed.
But how do they know that you have 2 years if you're just looking at their W-2?
If you're just looking at, we don't normally, we're not going to request tax returns for a W-2 borrower anyway, unless they have a Schedule C, and a Schedule C business, or a business on the side, self-employed at 1040, whatever they have on the side. But we're not collecting tax returns for W-2 individuals. They might file a Schedule E, which means they have some properties. Mm-hmm. So we'll at that point we'll have to collect a tax return.
But if they have nothing.
If they have nothing, just a W-2?
Yeah, like I work at Publix.
Okay.
I wish I worked at Publix.
Very, very easy.
I would have off a few days a week.
Yeah, right. Whoever works at Publix seems to stay at Publix.
I know, it's a good job.
It's longevity, so they take
So
care
let's
of their
say I
place.
work at Publix, right?
Yes.
Let's take some scenarios here for a
Okay.
minute, okay? Let's first take I work at Publix.
Very easy.
Okay, so I'm W-2, right? I should not be writing off my cell phone. I should not be writing off my gas. I should not be writing off my laundry, my dry cleaning. Speaking of which, can you write off your dry cleaning?
So basically, they took that away from all W-2 employees a few years ago.
W-2 employees, you could write, you mean 1099?
No, W-2 employees would file what's called a Schedule A on the tax return. So I would have some W-2 employees working for a Publix, working for the post office, working for a W-2 in a W-2 position, filing a Schedule A and deducting and itemizing expenses they were claiming were due for their business. Like you might want to deduct your cleaning because, hey, I have to wear nice suits and I have to get them cleaned. Or you might want to, I needed a couple of pens and pencils, so I deducted that on my Schedule A. And as an example, you have someone earning $100,000 a year, and they're taking $90,000 in Schedule A expenses, showing a net of $10,000. That's an audit waiting to happen. But either way, they've gotten rid of that. So W-2 employees can no longer itemize those expenses.
So W-2 cannot write off stuff, right?
Correct.
So that's what I'm trying to understand right now. Like, how does that work? So, you're saying you would not, so let's say this is my first year working at Publix.
Okay. Well, we're going
And I
to.
gave you the W-2.
Right, you're going to give me a W-2. We're also going to we're going to do a VOE, a verification of employment.
Oh, so we'll ask how long you've been there?
That's sent to the HR department, whether it's electronically or we physically email it to an individual, and they're going to disclose your start date, all that good stuff will be verified.
So if I've only been there for 3 months.
Right, we know.
And that's no good.
Well, I mean, listen, we always look for a 2-year work history. So if we'll use education if you just graduated business school. For example, if you're working as a CPA or an accountant and you've only been on the job for 1 year, but you were in college prior to that taking business classes, we would request a copy of your transcript that shows you were in school for the last 2 years. That would fill the gap for the 2-year employment. But to be on the job for 3 months, we're going to need to have a 2-year work history. We'll accept a 1-year work history and then that's the difference between Fannie Mae and Freddie Mac. They do the same things, but they have different type of guidelines. Fannie Mae wants a solid 2-year work history, whereas Freddie Mac will accept 1 year if it makes sense that income is stable and it's likely to continue.
Okay.
Yeah.
So let's say I work for Publix.
Okay.
And Publix has amazing stock.
Yeah.
So let's say I cash in some of that stock. Am I still W-2 and you wouldn't require a tax return, or now because I have to pay taxes on that stock?
No.
Does that change things around?
That does not change. That does not change things around. We just have to document where that income that you're using, that you will see that large deposit. If we see the large deposit, if you cashed it out, 3-4 months ago, we're not going to see that large deposit in your bank account. But if you happen to give me a bank statement and we see that large deposit, hey, where did that $20,000? Oh, I cashed out my public stocks. All we're going to do, all we need.
Yeah, but you had to pay taxes on it.
We're not going to require that we see that you pay taxes on that. We're just going to be required, unless we're using, because we're not using it for income verification. We're using it for your asset verification. We just have to document and show the paper trail where that money came from.
Okay.
But yes, it's simple. A W-2 employee is a very, very simple verification. We take the application, we make sure we talk to our buyer, our borrower, we talk about the work history, and then we verify it with HR, and maybe they're piecemealing it. Maybe they've been at 3 different companies over the last 2 years. We'll do verifications for each employer. But we're going for a W-2 employee with no properties and no other like side hustles or self-employed jobs. We just require the most recent W-2, and those closing in January probably haven't been issued the W-2 yet. So we'll ask for it, but we'll get an explanation. Haven't received it yet. Sometimes they receive it in February. So we're going to collect 2023, 2024, the last 2.
Okay.
But so it's a very easy verification. We would not require tax returns for W-2s. You get into the self-employed individuals, that's where it gets hairy.
So is this legit to come to you prior to going to buy a house and filing our taxes to ask you, like, how should I file my taxes?
It's
Is that like a little bit on the...
It's a gray area. We shouldn't be telling someone how much they need to show in order to qualify. But it's a good idea to discuss with a lender, show a lender before you're looking to buy a house, before you file your taxes, have a conversation. You might want to rethink some of your expenses and have a conversation with your CPA. Listen, nobody loves to pay taxes. But when it comes down to qualifying, you're going to be happy that you did and you showed what you showed. Because in order to purchase a home, you have to show us the money.
But if you don't want to basically show your tax, like you don't want to pay, right? You have other options, right?
If you don't, there's different programs for self-employed individuals, and that's where all those other non-QM programs come into play. DSCR, but that's for investment property. That's purely a no income verification loan. We're just going directly off of the rent roll of the property to qualify.
Yeah, but that won't work if you already don't own something. You have to own a property, right?
You have it's for investors, and they want you. There are some.
They want to know you're not going to live in it.
There are some non-QM lenders with a nice explanation. They will allow you to do a DSCR loan without owning a primary. Like if you're renting, if you owned a primary in the past, you don't know. But for first-time home buyers, it really doesn't make sense. You're starting out. You're buying an investment property before you even owned a home.
Well, wait a minute. So. And I know this doesn't sound right because I'm a realtor and I want you to buy a house, right?
Of course.
But I actually have seen some change of model. Mm-hmm. People that, now this doesn't mean you don't ever buy a home. You buy a home, you create wealth with the home, and once the wealth is there with the home, what I'm seeing a lot of people doing is cashing out on the home, taking the money, and creating other streams of revenue and renting.
Correct, yes, yeah, of course.
So you have to first create wealth owning the home. So obviously the younger you start, the better.
Which is a great advice to give to everyone who's just starting out. I think the best thing, especially my first-time home buyers, I wish I had that philosophy. I wish I did that strategy when I was 23, 24, 25. I rented, until I was probably 29 years old, 30 years old, until I bought my first home. But it's the greatest thing you could do. The problem I'm seeing now, everybody starting out is looking to purchase their dream home.
No,
it's
you don't have
young.
to be. You gotta.
You don't need that. You need to just get in the game.
And then you create wealth through that, and then you move up.
You need something to trade up with.
Right.
And the only way you're going to be able to trade up if you just get into the game.
So what I always say is, I could not have the frank conversations that I have today if I had not been doing this as long as I've been doing this. So things. So 26 years ago, I did not have the knowledge nor the ability to have a conversation with somebody and go, you really should buy now because in 10 years it's going to be X, right?
Right.
But after 26 years of doing this, right, now I'm able to say, like, every person that bought 10 years ago is ahead of the game. Every person that bought 20 years ago is way ahead of the game. So you have to stop being so like blinders and be like, oh, it's too expensive. Because what's expensive today is going to be really expensive in 10 years.
Which means it's not expensive today because prices are only going higher. And that's why you have that confidence when you talk to your clients from your experience. And history will always repeat itself.
Yeah,
that's why we study history. So we know where we're going. Prices are always going higher. So what's expensive, like you said, you may think it's expensive today, but in 10 years you're going to look back, wow, that was inexpensive.
Yeah, inflation has really been, so inflation took a real high markup, and you're seeing a little bit coming down and leveling off a little bit. So
I call it more the leveling off of expectations and not inflation, because I don't think prices truly ever go down. Prices always go higher. But if you have a property, in my opinion, that's worth $1 million, and you're putting it on the market for 1.25, I think it's just going to sit there. Mm-hmm. It's going to sit there, and then what? After 6 months, they're going to lower the price, and the market's coming down. I lowered my price twice. I mean, you know better than I do. What happens to a property when somebody lists it at market value? That doesn't sit too long, does it?
No.
I mean, it's supply and demand. We actually have a housing shortage in this country.
We have a good-looking housing shortage.
Right.
They don't look good.
Right.
So it's like you got to put a little love into them, and they got to look.
Of course, you need a little street, street appeal. But it's funny. I see homes. You price it right, but the market's not. The market's not stupid. They know when it's priced right or not.
Right.
Yeah.
So we're going to go to commercial break. When we come back, let's talk about what are rates doing. Are they going up? Are they going down? Mm-hmm. What do you recommend? Any special programs out there that we can talk about?
Yes.
So stay tuned.
Okay.
Check out our sponsors, and we'll be right back.
Roads lead home with Fairway Home Mortgage. When it comes to home financing, who you work with matters. At Fairway Home Mortgage, we combine the strength of a national lender with the care and accessibility of local mortgage experts. We offer a wide range of home financing solutions, personalized guidance, and a streamlined process designed to keep things simple, from application to closing. Because at Fairway, home isn't just what we finance, it's what drives everything we do. Connect with Cliff Bernstein, Branch Manager, NMLS number 7853 at 561-213-6852 to see what your options are today. Company NMLS number 2289. This is not an offer to enter into an agreement. Not all customers will qualify. Subject to underwriting approval, other terms and conditions may apply. Equal housing opportunity. Loan officer NMLS number 7853.
At JK Closing Attorneys, we do all of the same things that a title company does, but with the benefits of being a law office. We can help with residential real estate, short sales, commercial real estate, refinances, 1031 exchanges, and FIRPTA withholding.
Contact JK Closing Attorneys today at 954-332-3111. Again, that is 954-332-3111.
Priority One Credit Union of Florida is a welcoming credit union that makes your financial success our number one priority. We offer lower loan rates, higher deposit rates, and common sense local loan approvals, with nationwide access through shared branching.
Hi, I'm Dina Hennessy, President and CEO at Priority One Credit Union. We are open to the community. Anyone can be a member of our credit union, and we would love to have you.
Contact us today at 954-335-5100. You can also reach us at PriorityOneFL.org. Your financial success is our priority. That's 954-335-5100.
Hi everyone, welcome to Making Money with Laura Sanders, and I am Laura Sanders. Today we're talking about mortgages, we're talking about filing your taxes, how to buy a house, like should you get a little birdie saying in your ear how much you should file your taxes for? I don't know. Though it is helpful for our clients to know really how much should you be putting down on. I mean, you can't just put a number, like any number. Like you have to have legit money. Yeah, but people like to write things off. Like people like to write off their car, and they like to write off their cell phone, and they like to write off their gas and their mileage and this and that, and write off.
You know, these are legitimate business expenses, but it's not automatic. I have conversations with a lot of self-employed individuals, and they come to me with their expectations like, oh, I'm not going to be able to be qualified. And I asked, why? Why do you feel this way? Oh, because I'm self-employed. What does that mean?
Some of the richest people in the world are self-employed.
It does, you know.
I'm self-employed.
You're not walking around with the scholar because you're self-employed. It's just you have to rethink the way you do your taxes and not itemize everything. Yes, legitimate business expenses should be itemized. And if everyone, when I ask, and it's amazing how, as a W-2 employee, you know what your salary is. Everyone knows what they earn on income. They know what their bonus is. They know their commissions as a W-2. Self-employed, they have no idea what they earn. Well, I earn this. No, what they're telling me is they're taking this in revenue. This is how much I get in revenue. Okay. So I'm taking it, I make $1 million. So I take a look at the tax return. I'm like, $1 million, according to your tax returns, you're making $42,000 a year. I see you took in revenue of $1 million, but look at all these expenses. Now you're making $42,000.
I guess if you write off going out to dinner, you got to enjoy your life, but
right. So
this is what's left after all the entertainment.
You have to rethink the way you do your taxes. You have to, again, you have a conversation with a professional. But tis the season. Now's the time, because once you hit that button and you send that to the IRS, it's too late.
Well, you can go back and fix it, but
you could do
you
an
are
amendment.
now opening yourself up to being audited.
Yeah, you don't want to apply. You don't want it's a gray area. Are you just doing this amendment just to
buy a house.
Qualify for a mortgage loan, or was there legitimately a mistake? Because mistakes happen.
So what if 1 year I write off a ton of stuff?
Okay.
Right? So now it shows 42,000. Next year I'm like, oh, I want to buy a house. So now I'm not writing off all this stuff. Now I jump from 42,000 to 375,000.
Correct. So
what does that mean?
So what that means, and you have to look at the qualifying income for self-employed, what we're going to use. First of all, if you're self-employed for at least 5 years, Fannie Mae and Freddie Mac only require the most recent tax return. We only need 1 year tax return. So now's a great time. If last year you had no idea you're going to buy a house and you itemized everything, you took so many expenses, you're not showing enough income, now's your opportunity. If you've been in business 5 years, we're not even going to look at that return. We're going to look at your most recent return.
Oh, okay.
So you have a good opportunity. But if you are in business, if you're incorporated less than 5 years, we're going to simply do a 2-year average. So in your scenario, one made $42,000 in 2024, $300,000 in 2025. We're simply going to combine the 2 years and divide by 2. If it's declining, if it was the reverse, 300, now it's 42,000. We're showing that's called declining income. Never a good thing. We're not going to average it. We're going to take the lower of the 2.
Interesting.
Yes. So
what are we looking at rate-wise today?
Great news. The last time we had a conversation, rates were going up. The rates are now coming down.
So what's an FHA loan right now?
FHA, you could do below 6% right now in FHA. I would say solid as an average, you're around 5.875 on FHA. Okay. Maybe even lower when I get back to the office later. It just seems like to me, and I follow the market every day.
I hope so.
I have my screens up. I have my charts. I'm looking at the mortgage-backed security bonds. There are things going up and down. There's things beeping at CNBC on, listen to the so-called experts. But it just seems like rates want to come down at this point over the last week and a half. When bad news starts to become good news for rates, it's rates. We moved up right at the onset of this conflict. There was a little panic that set in.
People were stopping to buy.
Oil prices surged, caused inflation.
Gas is still high right now.
Oh yeah, I mean there's a lag time too, but oil's still up there. But rates are coming down, and it just seems like any type of good news comes out, any good news, rates go down. And if bad news comes out, they gap up a little in the morning, and then they get better in the afternoon. So it looks like we've peaked on interest rates, in my opinion, for the short term. I believe we peaked when the 10-year hit around 4.5. I think that looks like a good top for the 10-year Treasury. And if you're looking to follow interest rates, you might not be able to follow the mortgage-backed security bonds. Look at the benchmark 10-year. Look at the 10-year Treasury, and that'll give you an indication what's going on with rates. When I just left the office about an hour ago, we were around 4.27 on the 10-year Treasury. We peaked at around 4.5, but it's been coming down, and interest rates, mortgage rates have been coming down as well. So, yeah, and they look like they just want to come down.
Interesting. Yeah. So, if somebody was thinking about doing a refi right now, what does that look like?
Yeah. So, I mean, refinance. You really have to assess. You have to find out what makes it worth it for you to refinance. Because just to throw out a number out there, $100 a month savings for one person might not be a benefit for another.
And it might cost you $8,000 to save $100, so you're really losing because now you've added $8,000 back onto your property.
Exactly. I mean, some people, you want to make sure there's a benefit. You want to make up closing costs. You got to make it up in at least, you want to make sure, in my opinion, 2.5 to 3 years, you're making up your closing costs. Also, if you only plan on being in that house for 2-3 years, you're not going to refinance. Right. So you have to look at everything. How long do you plan on being in the home? How much am I saving? What's the cost? But for my clients that were at 8%, 7.5%, now is a good time to refinance if you're looking for that savings. There's quite a bit of savings. In my opinion, I don't play that. I'm more of a purchase business money. I'm a purchase money guy. I always have been, because rates over the last 15 years have been pretty low anyway, and the benefits. All right, even when the rates were 2.5% to 3%, like a lot of my clients were in the high 3s, low 4s.
Oh wow!
So
because you did them right by the beginning.
That's where the market was, since 2015, 2016. They were kind of low.
What makes it that everybody should call you, and what number should they call you at?
Okay, so everybody should call me at 561-213-6852.
And why should they call you rather than anybody else?
Because I have over 30 years experience. I'll do for you as I would do for myself. I'm a student of this business. I'm going to talk to you. I'm going to educate you. I'm going to explain what your options are, and I'm going to make sure you understand what you're doing. And we're going to make sure together that this is the right thing. The conversation, listen, I'm not telling you to refinance it. People say, it goes down a point and refinance. No, that's when the conversation starts. If you see that thing, if the 30-year average or 15-year average is a point lower, have that conversation, and then get a game plan when it's going to be worth it for you.
And I was going to say, I think that if you are thinking about refinancing your house, and rates are probably not right now in the best place to do that, I think you should give Cliff a call. And if you didn't catch his number, you can always reach out to me. But I would say give Cliff a call so that you're starting to prepare and be ready
it's always
to do that
great to be
when
ready.
it's time. And he'd let you know, because he's got those things beeping in the
they're
back.
Beeping. I can hear him now.
And he needs to know who you are to know what are you paying right now. Because if you're paying 8%, like maybe he's got something that's going to make sense for you. So.
And you know what I like to do? This is what I really recommend when you do refinance. So if you have 27 years left, don't go back to a 30. Maybe refinance to a 25, to a 20, to a 15. So in some cases, you may not be saving any money, but you're cutting off a lot of term that could save you hundreds of thousands of dollars.
So call Cliff or give me a call, Laura Sanders, RE/MAX Direct, if you're looking for a top agent. Together, we can help you either buy a home, he can do the mortgage, I can find you the home, or he can help you refinance the home. And like always, thank you so much for listening to Making Money with Laura Sanders. I don't even know my own name. Laura Sanders. And until next week, make it a great one.